All right, guys, welcome back to the Independent Investor Channel. My name is Ryan. I think it's fair to say that we have went through a downturn of historic proportions. I think we're probably going to refer to the 2020 crash, and anybody who had money in the stock market is going to be able to recall with some accuracy how violent of a drawdown it's been. I thought I'd put out this video and talk a little bit about what we've been through, what we went through during the downturn, and what we do going forward. And in this video, I think we're probably striking at the highest level of benefit when we're talking to the subscriber base, letting them know what it is that I personally did going through the downturn, some of the psychology, some of the influences that were rampant on the investing landscape, especially through social media, YouTube outlets like this, absolutely. But how did you react to them? How did you weather the storm? Are you prepared for the next one? And those are some of the things that we're going to talk about in this video. Let's get right into it, guys. How did the portfolio hold up during this downturn? And this really speaks to the style of investing that you want to put into action and what type of investor you want to be. I'm a 50-50 investor. What that means is I do about half of my equities holdings in a dividend growth strategy. I'm trying to achieve dividend growth strategy by seeking exposure to some of the highest quality names out there, some blue chip companies, the companies that we've all heard of, McDonald's, Home Depot, Apple Computers, Microsoft, JP Morgan, and the like. I've usually been very successful in seeking out best of breed companies that have an extremely wide moat. For example, a moat is defined as such to be that Coca-Cola Classic has a wide moat. Are people going to stop drinking Coca-Cola tomorrow? Or because we've entered into a downturn? I think not. These companies have been around for decades, and they'll continue to grow upon that moat as they continue to push out their products going forward. The idea of becoming a participant in the stock market is to take a pause for a second and say, what does it mean to me to be a participant into some of these names? And I think a lot of people misconstrue the investing opportunity by thinking that they have to find the next best thing, or they have to somehow outthink the system. All right, stock picking is more of an active profile for an investor. And I think for a lot of new investors, that active profile really isn't that attractive. So they'll opt for more of a passive program. Passive investing means entering into an ETF product or an index fund product that allows you broad, diversified exposure to any of the broad markets, whether it be the S&P 500, or maybe you want to get a little bit more specific like a Russell 2000 in the small cap space, maybe even diversify a little bit more and grab some technologies with the triple Qs. You could do something like that. But for me personally, I think a lot of people tune into the channel to understand how it is I deploy my strategy. Going into this downturn, I had a pretty healthy amount of cash on the side, so I was able to leverage that cash and inject cash on the way down. I probably got a little bit premature because I really didn't forecast the violence of the drawdown. So I had most of my money in around 25,000 and then was able to trickle in a few other strategic buys on the way down. I was able to double up some of my smaller accounts, right? So the $2,500 account that I started with the specialty ETF portfolio, the Spiders, the Vanguard ETFs that I have there, I was able to go ahead and put a $2,500 bill on that and was able to double that. And then I was able to strategically take some of the cash that I had on the side and establish the taxable joint brokerage account, right? This was a goal that I had prior to any type of volatility. Now, there's no way I could have foresaw what the drawdown was going to be like or what it would eventually look like. I thought it was going to be based on economic slowdown and definitely not due to some sort of pandemic, which has really put a scare through and rippled through the markets. Nonetheless, I think there's an underlying lesson that comes out of this, and when you objectively look at your portfolio, ask yourself, how did my portfolio hold up? How is it that the holdings that I put into action as an investor hold up during one of the most critical stress tests or most violent and aggressive stress tests that we've ever had in history? So if you've made it through this and you're on the other side of this, reflecting back on it, congratulations, because you will come out of this stronger, all right? And I will not apologize for people gaining experience in the stock market, as there is no substitute for experience. The next thing I'll talk about is, how did you hold up, all right? You can have the most beautiful portfolio. It can look great on paper. It can pay you a higher than average dividend. It can gain you exposure to every stock in the world that you think is absolutely untouchable, and that's great. But please keep in mind that being an investor is only that. It doesn't define you as a person. And if you went through sleepless nights, perhaps maybe this is a time to reflect and maybe recalibrate your program. Maybe you don't quite have the risk tolerance that you thought you did initially before you put your portfolio through this stress test. And I think being honest with yourself will really help you prepare for the future, because again, you want to leverage this as an opportunity. You never ever want to say, I never want to go through that again. We absolutely want to take the other end of the spectrum and say, bring it on. I'm more prepared now than I was before. And that is actually the truth. How can we leverage this opportunity going forward to prepare maybe for the next downturn, all right? So being honest with yourself and allowing this opportunity to further define your risk tolerance is a key takeaway to this review of the 2020 crash, all right? Were you prepared? That's the next thing, and I always want to foot stomp this opportunity for investors, whether they be beginning investors or seasoned investors alike. I find this error amongst a lot of seasoned investors in that they are invested to the gills, but they don't have 2 red cents to rub together on the sideline to potentially do some strategic buying. I really do think that's a mistake. And I think the mistake occurs when people would say, well, the cash isn't working for yourself, therefore it's a mistake to have cash on the side. I look at the two independently, I really do. The stock market is going to perform over here, and your idle cash over here is going to perform the way that you ask it to perform. But when it comes time, it sure is nice to have that idle cash on the side to deploy and maybe strategically siphon some of this money off to put to work in the market. I know I benefit from it. I went into the downturn with idle cash, and I'll come out of the downturn with idle cash as well, having put a lot of that capital to work and rendered a lot of profit before, during, and now after this V-shaped recovery, okay? So it's very, very important to understand how prepared you were, and it goes into how your risk tolerance fared during the downturn. Did you have an adequate handle on your budget? Did your spending change at all? Did you find yourself erratically spending because you're losing all this money over here in the stock market? I could have done this, this, and this with that money. Therefore, I'm going to go and have some fun with my money, right? And not stay disciplined on your program, right? So very, very important to deliberate over that. What did you do during the downturn to actually improve upon your portfolio? Were you so shell-shocked that you basically said, I can't believe that I'm in this and I can't wait to get out of it? I think there's a counter approach to when volatility kicks up in the stock market and actually do what it is that so many other people are justifying away from doing, and that is buying the market, okay? I was buying the market on March 23rd. Did I know March 23rd was going to be the bottom? No, I didn't. But going along with one of my fundamental philosophies to always objectively look at the market and take what it is that it's giving you. And at that time, when it was down to 18,400 in such a short amount of time, below 20,000, off its just recent highs of a month earlier at 29,400 on the Dow, It appeared to me to be a good inject. Could the market have continued to go lower? Yes, it could have. But again, I'm not in the business of forecasting where I think the market is going to go, because nobody knows that. What I'm in the business of is focusing on what is right in front of my face. And on March 23rd, it seemed to me to be a pretty good time to go ahead and make another injection, like I had done leading up to that, what eventually is looking like to be a bottom, at least for the short to medium term here going forward. So the question for each and every one of you guys is, did you take advantage of it? Were you prepared to take advantage of it? What are some of the moves that you did to improve your portfolio? Were you prepared to make those improvements in the portfolio, or did you catch it by surprise? And how do those look shaping up in reflection of somebody that's actually went through a very violent downturn that we just went through? And finally, I will say this. It's super important to come out of these 2020 crashes, just like the one we have, or any of the previous recessions that we've had, to always come out of it stronger. We always want to make sure that we're keeping our eyes to the horizon and making sure that we're always in reflection, learning from what we've been through, but also how we can take and deploy those lessons learned going forward. Extremely, extremely important. So what are some of the things that you can do to improve upon your investing discipline? All right. We offer a lot on the channels, and I'm trying to expand my social media presence. We offer the Instagram, we offer the Twitter, we offer the YouTube, not only the videos, but we offer the Friday live stream. We are aiming, in one word, to provide to new investors an awareness perspective, that of which was never, ever possible before the power of social media took this investing topic and really put it out there in front of people to consume. I really think it puts people to a decision to either be more proactive with their program or be reactive on their program. It requires the investor, whether it be a beginning investor or a seasoned investor alike, to take more ownership over their existing program. And I'm sorry if that is a scary proposition for a lot of people, but that, in fact, guys, is the world that we live in. What I would recommend that you do is embrace that opportunity going forward and enjoy how much more awareness you can gain on the financial topic by enjoying a lot of my social media properties and a lot of other social media opportunities that we have through this great community of investors, to gain that awareness and gain that perspective and continually evolve as an investor and improve upon your investing posture based on what you've learned, what you've went through, and more importantly, where you're going into the future. Guys, thank you so much for tuning into the video, man. You want to hit the subscribe button, help me support the message that we're putting through. Leave your comments at the bottom of the video as usual, and share the message. The most important takeaway from this video that I ask you to do is to share the message with anybody out there that you know that needs to be brought to this opportunity. And make no mistake about it, it is absolutely critical that as many people as we can get to discover the power of self-directed investing, because if there's one common thread in this community that we all have, we are all empowered self-directed investors, and that is extremely powerful, guys. Thank you so much for tuning into the video, and good luck in your investment future.